Hello and welcome. Today is the 28th day of April 2014. It's a Monday. Welcome to today's analysis with two charts that I've shown in the past, and I want to update both of them. One of them is the coffee chart that you can see on the screen, and based on the title, you also know that the US Canadian Cross Index would be the next one. And this is just going over analysis using technical information to make plays in that of a casino style game. For if you are playing against other people, for every winner there has to be a loser, so it is essentially graded on a scale, which means you got to be good enough to win at that game, because if, say, 3/4 of the volume is doing better than you, you're probably going to lose. If a quarter or a third of the volume is doing better than you, well, then maybe you can win at this game, because really that's what it is. It's a numbers game. And well, let's now move on to the analysis. On the 14th day of March, I went over this chart, which was the coffee chart. Interesting because it was in an uptrend, then it topped, and for a period of about 2+ years, it made a pattern of lower highs and lower lows. And then boom, it just shot right up all the way down from 98 to over 200. Big move. And what I was stating at the time of the video was, in this game, you would look towards a bet that this is going to go lower. So a short position, you're buying puts, whatever it may be, you play the game on a strategic level that's going to yield you the highest return on your investment. That's the basis of it. But anyway, so I was stating you would bet this to go lower. Obviously, I would, well, not obviously maybe, but the price target you would be looking to profit at would be within here. So you're betting at 201.50 that it's going to go lower. Around 155, you are going to sell maybe 158, depending on, of course, how you play the game, and then you put some sort of stop depending on your risk tolerance somewhere above where you played. So let's update this chart now, and here's what we have. We obviously topped in here, and it came back down, and it's now went above it. So what does this tell me? First, within your wager, if you did make this bet, there was no way you lost, and how much you gained, well, that would be the interesting question. 4, as this is going lower, would you have ever sold on the way down in the end, or cut out of your shorts, whatever, exit position? No, because your target was here. Therefore, what strategies was used to ensure you didn't lose? Well, there would have been two decent ones. One is, if it ever goes above a 61.8 from this high to whatever this low happens to be, well, that's where you get out. So this high, this low, 61.8, somewhere around here, you might get out for a tiny profit. Maybe you go above the 38.2 just to ensure decent profit. However you play the game, you play the game. Maybe you buy call options down in here somewhere. Therefore, if you've done nothing, you shorted here, you still got your position, you bought call options here, they haven't expired yet. Well, now you can get out of your trade for a profit, because you are at the point where you got in 201.15, you got in at 201.50, so you technically be up micro percentages, and your call options would obviously profit. So that would be just different strategies one would use. Now let's look at the message of the market as we see it today. Okay, you've had this move. You've had a noticeable retracement that didn't go down to this level. It has since resisted it again. Well, maybe. But it went above this level, and now it's back. So now this level of previous resistance is now that of support. So interestingly enough, if you start to see this thing break out, your price objective is now up towards this previous high. If you start to see between this high and this low that it's not holding about 61.8%, well, now there's a good chance that it will ultimately test this level, because I would be seeing this breakout as a failed move if that situation were to occur. The next chart is the US Canadian index, which I presented on the 21st day of February, a little over 2 months ago, because it had an interesting pattern. You look at this high and this key low, and you have a perfect resistance and a nice little bullish pattern that found close to it, a decent pierce below, pull back, and then as it resists this little bit, boom, nice little breakout. So what did this tell me at the time? That I liked the odds of this going towards this mark. The key level of support would have been in here. I mean, I wouldn't have guessed at the time, well, maybe it's going to keep going straight higher there, which it didn't do. Maybe it comes back to this level and does it, which it hasn't done, at least not of yet, because I'm going to update this chart on a much shorter time frame, which is the 2-day chart. Now, these numbers are very key, so I'm just going to write them in here so that I can copy and paste them into the next chart. So the key levels, as we can see on the left, you get the 61.18, which is 1.153, and then the other one is 1.067. Okay, so we're now going to update the chart, showing it on the 2-day for neither one of these two levels has been touched as of yet. So that's important to note, as we see here that if those are the two key levels you'd expect it to go to next. So let's update the chart. This is the 2-day chart. Let me stick in these numbers here. Okay. So we're having what was obviously that uptrend, and within it, what's a very interesting situation is that you have this high that took out this high, which was then followed by this low that took out this low. And within it, when you look at it based on the bands, you had a situation originally where it broke above it. Okay, so now I want to see it hold within this. I want, for more continued upside, I want to see it come back to this band, then break higher. Well, there's the break higher, but it didn't go any higher, or it didn't find support within here. Therefore, you've now got the situation where you've broken down below, and then you find support there. Now, as far as this Fibonacci level, I don't even know what the key, if it's that key. Obviously it's found support, but I'm not too sure what the best low to put in there. This was just automatic in that I've done this, I put this up pretty quickly. Anyway, two key levels from that previous chart, 115.3 and 106.7. So I figure either one of these moves is going to be a failed move. Usually a fast move is the next move that you have. Therefore, if this is the fast move, then I would expect the failed move, excuse me, if this is the failed move, I expect the fast move to come down to 106.7, which is right where this line is here, or this previous resistance mark. If this is the failed move, then my upside target is to 1.153, which is higher than what this chart has, because it's 114 on there. Other things to note within this chart is the bands, which upper and lower bands. This is in an uptrend, which is pretty much starting to go sideways. This uptrend has went sideways and down, which basically tells you neutral down bias. But it also states, when I see this, that the bands are narrowing in, and that's oftentimes a precursor that a significant move is going to happen. Now, it could still be a decent amount of time with the bands continuing to shrink in like this, and the volatility overall is not going to be too big. If you look at the volatility of what we have, 0.21%. Now, this is only 1 day, this period here. The next day will complete that 2-day pattern, but the average is 0.7. That's under 0.75% in 2 days. These things aren't too volatile. Now, I would expect them to get volatile when the true currency collapse comes into play, which should be significantly inevitable, but the timing of when, very difficult to point out, as what I'm doing is showing two currencies backed by absolutely nothing but faith. Yeah. Okay, so that would be it for today's video. Thank you for tuning in, and have yourself a great week. Bye-bye.